Welcome to episode 16 of our International Investor Education series. Today we are tackling a topic that often feels daunting: U.S. real estate taxation. Understanding this framework is key to your long-term success as a global investor. Hello and welcome. I'm your host, presenting for Steve Ford, one of Atlanta, Georgia's most trusted real estate investment companies. The topic of U.S. taxes stops many international investors before they even begin. The U.S. tax code is complex, I will acknowledge that directly. But for real estate investors, the most important tax concepts are genuinely manageable when you understand them. In this episode, I walk you through how the U.S. taxes your real estate income, why depreciation is a powerful advantage, how capital gains work at exit, and how international tax treaties may protect you. And, as I say at the end of every episode, please consult with a qualified tax professional before making any decisions. Let us get into it. We'll break down the four main pillars of U.S. real estate tax so you can plan your investment with confidence and clarity. First, let's look at the tax on the ongoing income your property generates, the rental income tax. If you own U.S. real estate that generates rental income, that income is subject to U.S. federal income tax. As a foreign national, you are what the IRS classifies as a non-resident alien. Your U.S. real estate income is taxed on a net basis, meaning you pay tax on your income minus your allowable deductions. Key deductions include mortgage interest, property taxes, insurance, management fees, and professional fees. These deductions can substantially reduce your taxable income, sometimes to zero. The standard federal withholding rate on gross rental income for non-resident aliens is 30% unless you make a special election to be taxed on a net income basis. This election almost always results in a lower effective tax rate. Your USCPA handles all these related filings. Next is Section 2, depreciation. This is arguably the single greatest tax advantage available to the real estate investor. Depreciation is one of the most powerful tax advantages in U.S. real estate, and one of the most misunderstood. The IRS allows real estate investors to deduct the cost of the building structure over a defined period. For residential properties, that period is 27.5 years. For commercial, it is 39 years. In practice, if you acquire a residential property for $300,000 and $220,000 is attributable to the structure, you can deduct approximately $8,000 per year from your taxable income every year without spending any additional money. This is a paper deduction. The property may be appreciating in market value while you are claiming annual deductions. Many real estate investors report zero or negative taxable income, while their actual cash flow is strongly positive. It is one of the most investor-favorable provisions in the U.S. tax code. Section 3 deals with the tax you may face when it's time to sell, the capital gains tax. When you sell a U.S. real estate investment, you may owe capital gains tax on your profit. Properties held for more than 1 year qualify for the long-term rate, typically 15 to 20% on the net gain. Your CPA calculates this precisely at the time of exit. The gain is calculated as your sale price minus your adjusted cost basis, which includes the original purchase price plus improvements, minus any accumulated depreciation deductions. The 1031 exchange allows investors to defer capital gains tax by reinvesting proceeds into a replacement property. International investors can technically access this, but there are important FIRPTA-related considerations. Always work with your attorney on this strategy before initiating. Finally, Section 4 looks at how international agreements can protect you from paying tax twice on the same income. The United States has income tax treaties with many countries, including the United Kingdom, that prevent double taxation. Under the U.S.-UK treaty, U.S. real estate income is generally taxed in the U.S. with credit available in the U.K., so you do not pay full tax in both countries. The United States does not currently have a comprehensive treaty with Nigeria. This means Nigerian investors face a higher potential for double taxation without careful cross-border planning by a U.S. CPA and a local advisor. For our Nigerian investors, working with specialists who understand both tax environments is essential to structure your affairs efficiently. Tax rules have nuances, and I have given you a framework today, but your specific situation requires specific professional guidance. That guidance is an investment, not a cost. Now, we must share our important legal disclaimer. Please listen carefully as this information is vital for your protection. Legal disclaimer. The information shared in this video is for educational purposes only and does not constitute financial, legal, investment, or tax advice. Real estate investment involves risk, including the potential loss of your invested capital. Past performance is not indicative of future results. Every investor's situation is different. We strongly encourage you to consult with a qualified U.S. real estate attorney, a certified public accountant, and your own financial advisor before making any investment decision. Steve Ford International is not a registered investment advisor or broker-dealer. Nothing in this video constitutes an offer to sell or a solicitation of an offer to buy any security or investment product. Please, before you invest in anything, anywhere, speak to a qualified attorney and accountant who understands your situation. We are here to educate and to partner with you, not to replace the professional advice you deserve. If this video was helpful, please like it, leave a comment, and subscribe to our channel for a new episode every week. Every episode in this series is free because we believe education is the foundation of great investment decisions. And when you are ready to have a direct conversation about your investment goals, visit us at stevefordnt.com and schedule a free consultation with our team. The link is in the description below. We look forward to hearing from you. We will see you in the next episode. Steve Ford International. Education is the foundation of great investment decisions. See you next time.